In this video, we are going to be doing some analysis on the S&P 500. We will be doing this over on the S&P 500 futures, ticker ES. Now, this is pre-recorded. We are recording this on Tuesday, December 6th. This will probably be released about 2 or 3 days after, just because I may not be able to record some videos. So again, we're just having some videos to make sure you're prepared for kind of the market condition going forward. So what are we paying attention to? So what is quite interesting here, we're on the left, we have a 6 month, on the right we have a 1 year. As you know, if you watch this channel, this is how we do basically all our technical analysis. This is how we get a good sense of direction, especially from a technical standpoint. So what we're really seeing on the S&P, and could be a very bullish signal if we can get what we're looking for. And by the time this is released, actually, you may even see it, and if so, even better. So obviously, like we know, first deviation, 68% of the data should trade within here. Going on to the second deviation, so these blue ones, 95% of the data should trade within. So really, on the S&P and these big indices, and really just the general futures, well, most futures in general, is you hardly ever see them break past a second. So really, it can usually be really good entries trading the second deviations. Again, just playing the reversal at these levels. But even playing the first deviations, a really high probability on these indices, because again, with things like the S&P, retail traders are not moving it. On a real, they're barely the ones moving it. It's going to be institutions, and institutions have standard deviation. That's one of the things they're paying attention to. So a lot of algorithms tend to trigger around this area, and it is also a time when they tend to reposition, because sometimes they deem it a bit more overbought. Obviously, when we're coming up to the S&P in this kind of environment, we're now a bit overbought. So you may see them flipping a bit more short bearish. Now, the first time you tap it, that's when we always have the pullback play. So again, here played out perfectly, was really kind of an easy play. We can see it pulled back around 135 points, which is basically 540 ticks, which is, you know, if you had one contract on that pullback, that could have made over $6,700. So again, these pullback plays can be really good, because again, you can have really tight stops on this. I mean, I probably wouldn't be risking more than, say, 15 points on this kind of trade. So that's how I would have been looking at that. Again, the reason I like stating this, even though this one's played out, it's the exact same. If we come into the second deviation, we're looking for the same thing. If we go back down to the first deviation, we're looking for that same thing. So that trade plan and kind of trade strategy is always there. Now though, what's happened is we kind of retested it 3 times. On this third time, we've broken through. But now we come back for this retest. We've come back to retest our first deviation. They're pretty similar on both the 1 year and the 6 month. So now this is really the important level to note, because this is where we really look for confirmation. So as of right now, it's kind of just holding around this level. But what we would really want to see is if we can hold this level and buying pressure come in. And really the easiest way to judge it, if you don't really know how to maybe look at the level 2, or you kind of just how to gauge if it's bullish or buying pressure, is really, do we break the kind of high? If we end up breaking the 4,100, that's more than likely going to be a bullish indicator, and we would expect a continued move all the way to the second deviation at 4,260. So that's one trade plan. Again, that's kind of getting one of the worser entries, but it's just the easiest way to gauge it if you don't already know how to gauge if buying pressure is really coming in. On the other hand, if we can't hold this level, which it is kind of looking like is happening now, and again, this may be more of a reaction coming into Friday. That's probably the only kind of big news we have coming out or this week, at least from the US side. So that would be PPI. So be looking out for that, because that may kind of dictate the direction that the S&P goes from here. But really, if we kind of get a few, well, I mean, another day or two closing below this level, it's probably more of a bearish indicator. And we would be expecting a pullback to at least statistical mean of around 3,775 to around 3,700. So that's really the shorter term outlook, what we're looking at. If we can't really break above, or kind of buying pressure can't come in, expect to move back down to that statistical mean. On the other hand, and like I said, the easiest way to kind of dictate if it's strong is if we can break back above this 4,100, again, ideally a close as well for that added confirmation, then there's a good chance we're going to continue going up, and we would expect around a 3.5% move to the upside to around 4,260. So again, that's a shorter term outlook. Going a bit further out, or if these levels break quite quickly, what we're then looking for is another level at 4,330. Then going through there would be 4,500. And then also quickly to the support side, paying attention to that 52-week low around 3,500. Obviously, is that 52-week low also our first deviation on the 6 month? Very strong level, but if we did break it, we would have another level at 3,390. And we'll kind of state one final one at 3,260. So again, a lot of levels here. What do you need to kind of do with all of these? So like we said, the trade plan, what we kind of went through before is, can this level hold? If not, expect to move back down to 3,750. If it can hold, expect a move, especially if we break this 4,100 to 4,260. Now again, the trade plan is the same no matter what levels you're looking at. It's just we went over these because this is the closest we're at. But basically what we mean by that is the first time you hit this level, again, expect a pullback. If you come back to retest it, again, I'm not looking to reshort it on the second go. All I'm waiting for then is a break. If we get a break of this level, what I want to see is a break above, come back to test it as a support, and if it can hold, then I'm flipping more bullish on it once more to around 4,340. And again, it's the exact same thing. If you come down to these bottom levels, is first deviation. First time you hit it, expect a bounce. If you come back to retest it, wait for that break, retest. If it holds, we will expect to move down, further down. Anyway, that is the breakdown on the S&P. I hope you enjoyed the video. If you did, want to drop a like and subscribe and check out one of these 2 analysis videos.